Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Apple report for Wednesday, November 8th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. Before I jump into the charts, I want to mention that on Tuesday we put out a Nike stock pick analysis. You may want to check that out. You'll see that for free if you take advantage of our 5-day free trial. Just wanted to throw that out there. On with the charts, big picture, work our way into the day itself. This is a weekly chart. This long-term support in the mid-160s, 165.40 to 166.82, able to contain selling through the rest of the year and well into next, and having settled above it last May, anticipating 230.62 as a longer-term objective that I'm expecting by this point next year or sooner. That sooner would come with a settlement in the week 2 or 3 ahead above 186.66. As you're well aware, when we were testing the mid-160s, I'd mentioned how the upper 180s should be considered a 1 to 2 month target. We're 3 weeks into that and may actually reach 186.66 by Friday's close. I'll get to that in just a second. But just in terms of the big picture, it would be a settlement at the end of any week above 186.66 that should result in an accelerated rally, or let's just call it a protracted rally. Continuous rally, not altogether different than what we saw from January of this year to what was at the July high. We could see another leg up like that within 3 to 6 months or so to 230.62. Until then, we can top out at 186.66 through November, fall back into the mid 160s again within a month or two of doing so. Fill this wedge out through the rest of the year. Of course, if we were over the next month or so to close below 165.40, then we set up for a sell signal. That settlement would need to be by a 1% margin. Closing the week at 163.75 or lower would set up a 3 to 5 month sell signal to 132.58. But we're a long way from that right now. In fact, we came off of the mid 160s. We settled above last week, this 173.72 descending speed line, which set up a 2 to 3 week target at 185.99. That same formation on the weekly chart is 186.66. In fact, this chart depicts the 3 to 5 day scenario well. 180.49, we settled above that on Tuesday, set up a 3 to 5 day rally to 185.99. With present volatility, we may see this by Friday's close. 180.49 can contain session weakness, and above which 182.85, that is actually this intermediate channel structure. Now, under other circumstances, this may be considered a session containment level. You could lean on it that way if you're an aggressive day trader. We could trade inside the 180.49 to 182.85 region all day long. But it is the settlement above the blue line, 180.49. I think that should yield 185.99 over the next 3 to 5 days. And I'll say merely closing today above 182.85 should yield tomorrow the 185.99 channel top, combined with the weekly version at 186.66, able to contain buying through next week, possibly into December, and from here we could fall back into the mid 160s. And of course, once again, if we were to close the week Friday above 186.66, a protracted rally through Q1 into Q2 of next year, 230.62 anticipated, which is considered a long-term target anyway, above the mid 160s. Let's go back to this chart. If we break, well, actually, I want to go back to this chart. This is the chart I want to say for the day itself. If we break, especially if we open today below 180.49, we can ease back to this 177.22 steeply rising channel bottom. That would probably be it for the day. But I will also say that if we do close today back below 180.49, you should allow a return to 173.72 over the following 3 to 5 days. This speed line, once again, able to contain selling through next week. And from here, we could rally back to 185.99 within several weeks. But we are well on our way to 185.99. And, closing below 180.49 should yield 173.72 by the end of next week or sooner, where we can place a weekly low. At this point in time, it really would be a settlement back below 173.72 that would indicate a retest of the mid 160s within a week or two of doing so. But I don't need to go into that scenario. It's not likely. I will mention that this Apple rally has actually, I think, helped the Triple Q post a meaningful buy signal as of Tuesday's close. Another good reason to become a wickedstocks.com subscriber. You can see the broader indexes at play. And so there's that. If that's of interest to you, the SPY, the Triple Q, so forth and so on. I don't think there's really anything else that needs to be said. This is a great image to leave you with. And I'm going to leave it at that for Wednesday's Apple Report. You have a great day. Please click like, subscribe, and share, and check out wickedstocks.com. You have a great evening.